Hey everyone and welcome back to Money Journey. Today we are diving deep into PayPal, a name synonymous with online payments. After a rollercoaster ride in recent years, PayPal has seen a significant surge, up a whopping 54% since its 2024 July lows. But is this just a temporary bounce or is PayPal truly back on track? In this video, we'll cut through the noise and analyze PayPal's recent performance. We'll explore the key drivers behind this rally, examining the company's fundamentals and assessing its current valuation. Whether you are a seasoned investor or just starting your investment journey, this video will provide you with valuable insights into PayPal's prospect. We will help you determine if PayPal is still a buy in 2025 and if it's worthy an addition to your portfolio. So grab a cup of coffee and get ready to learn. Let's get started. Alright, let's dive into the heart of PayPal's story. PayPal is a global leader in digital payments, enabling individuals and businesses to send and receive money seamlessly. They offer a wide range of services from online shopping and person-to-person payments to business solutions. Now, let's talk about why PayPal stock has been on a roll. Several factors have contributed to its recent surge. One key driver was the CEO's change. Changes are always welcomed by investors when sentiment is negative on the company. This new CEO came from Intuit and have a great track record of creating a lot of value for investors. In terms of fundamentals, there are a lot to love into this company. 90 billion market cap, forward P of 18, which is lower than the S&P 500 right now. In terms of growth, they have been growing around 14%, but this growth is slowing down. But their margins are really good. Gross margins of 40% and net margins around 14%. Their balance sheet is very good. They have more cash in hand than long-term debt, so the net debt is positive. Their returns are very good. Return on equity above 20% and return on investment around 14%. Bear in mind, this is a financial company. Financial companies usually don't have high returns on invested capital, but their returns on equity are very high, which is very good. In our Money Journey checklist, it's all check marks, which we'll always love to see. Revenue growth, positive, around 40%. Good margins, low debt, since they have more cash in hand than their long-term debt, it is very positive. It is a very strong balance sheet. Returns on equity above 20% and on invested capital above 20%, 10%, I mean. Their moat and competitive advantage, their network effects, it's really good. They have plenty of competitive advantage. Bear in mind, if I want to buy something online from a site or a company that I don't really trust, if I have the opportunity to buy it with PayPal, I have that safetyness. I like to buy with PayPal if I have the chance. So for me, that's the kind of moat and safety that we have with PayPal payment. But they have a wide moat. But bear in mind, my fear with PayPal is that they will face a lot of competition, and that's why investors were afraid. Google Pay, Apple Pay, that could take market share from PayPal, and that's a worry investors should take into account. They're having free cash flow positive, and they are returning capital to the shareholders, doing plenty of buybacks. So basically, it is a great company, fundamental wise and quality wise. But is this company really cheap? Bear in mind, they are in a slump. They were a company that were down 70%, but in the last 6 months, the company is up 50%. But is this company still a buy for 2025? Let's look into our discounted cash flow analysis. So first, assumptions. It's a US company. Risk, I would say it's a low risk company, but this could be a very safe investment. But since there are plenty of competition in this market and sector, I would say the risk is low. So for my base case, the discount rate I should use is 12%. So looking to my assumption in terms of margins, I would say they could recover. The CEO is doing a great job in my opinion. So I would say margins should be around 90%. In terms of growth, they are expecting to grow around 6.5% in 2024, around 6% in 2025. So I'm expecting them to grow 7% in the next 5 years, 5% for the last 5 years into the 10-year analysis. In terms of PE, that could vary. In my opinion, I do really believe they deserve a premium higher than the mean. The mean for the S&P 500 is 15, 16, but this is different times. This is a company with great margins, so I'm assuming 18, which is not a big premium because I don't like PayPal because of the risks of competition. So I assume an 18, but if you assume a 20 or 21, that could be the true or the fair P that PayPal deserves. So it's up to you. For my discount rate, I will assume 12%. It's a discount rate with some margin of safety taking into account because this is not the fair value. For me, it's the price I want to pay for the company, so I have to have some margin of safety. I always do my bull case and bear case with a more optimistic and a less optimistic assumptions, and with that I came with an intrinsic value of $66. The company was trading in July of last year under $60, which right now looks at a really great price, but right now PayPal is trading at a $90 price, so a little bit above the intrinsic value. If you want to take the fair value, if you assume a discount rate of 9%, we probably are close to fair value, but for my fair value always taking into account some margin of safety. I didn't bought the company when the company was under $60 because I did not thought that it was a low enough price for me to take this risk, but I still like PayPal, a very good company with a lot of competitive advantage and safetiness. That's their competitive advantage and their network effect. I really like the company, really great fundamentals, all check marks, but it is a company that is not growing so fast as they used to be. So for me, this is not a price that I'm interested to buy, but my fair value will be around $65, maybe around the $60 mark. I'm getting interested, but at this price I don't think that will be a great add to my portfolio. I think there are better options out there. If you follow our channel and subscribe, I truly believe that you will find better opportunities in the stock market. So there you have it, a deep dive into PayPal's recent performance, its business model and its current standing in the market. While PayPal has demonstrated strong growth and a commitment to innovation, it's crucial to remember that investing in the stock market always involves risk. I hope this analysis has provided you with valuable insights into PayPal's prospects. If you found this video helpful, please give a thumbs up and subscribe to this channel for more stock market analysis and investment tips. This video is for informational purpose only and should not be considered financial advice. Always conduct your own research and consult with a qualified financial advisor before making any investment decision.